You're watching Stockwatch this week. I'm Ntaoleng Lechala, and joining me to unpack your stock-related questions today, Kearabilwe Nonyana from Scope Prime Africa and Rowan Williams from Nitrogen Fund Managers. Be sure to send your questions through via email to stockwatch@bdtv.co.za, via SMS on 41392 or on X at Business Day TV using the hashtag Stockwatch. Gents, thanks so much for your time this afternoon. Before we get into some of the questions, let's kick off with general analysis on the markets picture. Things have changed. We are seeing a relief rally, as I guess there's been upbeat sentiment after President Donald Trump said he'll be cutting back on tariffs on China. He's also backtracked on his comments around the Fed. But I guess we can't get too excited because nothing is written in stone. Rowan, I'll start off with you.
Yes, agreed. It's very uncertain times, and clearly the Trump policies on trade, tariffs, and as you say, sort of governance of the Fed, creating a significant degree of uncertainty. Market participants not sure what to make of it. We know that Trump and his policies are sort of fairly radical, and his approach can be unorthodox, to say the least. So that just creates heightened uncertainty, which obviously makes participants more risk averse. So I think maybe things are not as bad as the market had anticipated in sort of the steeper sell-offs.
Yeah.
But having said that, sort of the issues haven't gone away, and I think we're at a bit of an impasse now. And so, yeah, the market continues to sort of make bets on sort of where it'll move from here, that there'll be sort of a détente and a lowering of tariffs between particularly US and China, which I think will happen. So, yeah, investors and participants are betting for sort of rationality to return, which I think is a reasonable sort of expectation. So we probably can, if there are no further sort of negative prognostications, the markets will continue to sort of firm and find a base and probably continue to move up from here. But we obviously remain on high alert and will watch for further developments.
Yeah, as you know, Rowan has said, the uncertainty really remaining the name of the game. In this kind of environment, we are seeing Q1 earnings season heating up, picking up. And what's interesting here is the outlook from some of the companies, right? We are seeing some companies pulling back on their outlooks. We are seeing some companies refraining from, making full year outlooks because of these uncertain times. What have you made of some of the numbers we've gotten out over the first quarter and those forecasts?
I think over my time in the markets, I've always wondered why earnings week, especially in the US, is such a hype storm. And I think it's particularly because of the historical nature in earnings reports. And for me, it's always listening to tones in outlook statements. And to be perfectly honest, with the release of the current results that we've seen over the past weeks, we've seen that the tone has definitely changed in the way management and governance teams are looking at where the US economy and specifically the global economy is going to be sitting in the next quarter. And I think markets can value risk very well. What they can't value is uncertainty.
Yeah.
And what I'm getting out of these outlook statements is more uncertainty than understanding of risk. And I think particularly because of the fact that the two biggest economies are right now in a war, what has really been quite the glimmer of hope in the market right now has been the fact that there have been a lot of really toning down of the rhetoric within China and the US and looking at how companies such as Costco have went to Donald Trump and said, you know what, if we carry on this way, there might not be food on our shelves for American people. And you've seen the toning down, and you can never really predict what Trump says. But I think what's even more positive, it's what's coming out of China in the fact that with these 125% tariffs, there have been a lot more exclusions which have been for some sectors, which really has buoyed markets in the past few trading days.
And let's take a look at some of those earnings that have come out today. Earnings out of the tech sector, particularly particularly Alphabet, out overnight. They're topping expectations on that front. And there's a question on tech counters, including Alphabet. The question reads, I recently bought some shares in Google. I definitely believe Google isn't expensive and neither is Amazon, but I do believe Apple is. At single-digit growth for Apple, I think 35 times earnings is expensive. Now, Rowan, would selling some Apple to buy more Google and Amazon be a good move, or does the panel think I should just hold on to my Apple shares?
Yeah, so it's an interesting question. So I think what you're doing if you're selling Apple and moving to the Google ecosystem, sort of a walled garden approach, which has always been Apple's approach in terms of the entire ecosystem. It's Apple or nothing. Moving towards Google, which is more sort of open-ended, and Gmail and Android and the various options, which obviously Samsung and other handsets. So for me, I think that is a more sound strategy in terms of especially where the world is moving and more interoperability and APIs and interaction between various platforms. And the valuation metrics also make a lot of sense. I think what's been weighing on Google or Alphabet has been sort of this growth in AI and what that's going to do to the search business. And so that's been a concern, but the recent numbers that came out, the search business was still very healthy, still saw positive growth. Their cloud business continues to trade very well. And I agree, the valuation here does look quite attractive. And so I think it is a sound move to sell Apple and buy Alphabet.
And what do you think, Gia? I mean, we spoke about those antitrust issues also weighing on Alphabet, but you have Apple on the other side. That's been, trading weaker on the back of, China, issues around production. What's your take on that front?
I mean, you are correct in saying that Apple has more leverage towards China, and the sale of the iPhone there is what's really been concerning. And I think what really is more concerning for them is the input cost rise on Apple, and I think that's what's weighed down the share price, even though it's still sitting at a very high valuation. But what's more interesting, as Rowan said in Alphabet, is just the component parts of that business are not just search. I mean, they've got such a good ecosystem in cloud-based computing, in visual entertainment, and you're seeing the compounded annual growth rate of just single businesses just really speaking towards how Alphabet has really created an ecosystem that has really geared itself to being as open-ended as Rowan has said. And for me, particularly, that trade moving out of Apple and into Alphabet is a sound trade, looking at where the valuations of both these companies are right now.
And let's stick with the tech sector. In terms of earnings, right, we also saw Tesla out with numbers. Those numbers not really looking good. I think net income plunged over 70%. They're, of course, dealing with tough competition. But, of course, the Tesla brand also, under pressure with Elon Musk's, affiliations to President Donald Trump. Just your general analysis on the numbers and whether you are seeing perhaps some upside that could come through on that front, considering that it'll also be the least car maker hit by those tariffs.
Yeah, I think
genuinely. Oh, sorry, Rowan, you can go ahead.
Oh, sure, thanks. Look, I think the Tesla investment case has been quite divisive. It's been an issue of sort of valuation versus prospects. And I think from my perspective, the prospects have been way too optimistic.
Yeah.
And for example, you look at analyst reports and they're saying they're lowering the price forecast because they have lower expectations of penetration of robo-taxis, which is a product line that they're still developing. They haven't even launched yet. So notwithstanding and the current business, and I agree, it's taken quite a significant hit from Musk's involvement with Doge and the administration. I think has been negative for the brand. Whether that's permanent or temporary remains to be seen, but there's also a lot of very effective competition, particularly coming out of China. So maybe in the US, their sales will hold up a bit, but they sold 40% of their vehicles in China until recently. So that's a massive market for them. That's also very negative. So for me, they're much more sort of ticks in the negative column than the positive column. So we're still avoiding Tesla.
So let's get your take, Gia. I think that share price is also down about 40% this year alone.
No, apart from the obscene valuations in the stock, I think what Rowan's saying is that what Rowan's saying about China is very impactful, because it's Tesla is no longer the #1 selling electric vehicle in China, and it's quite a big market. And China's development of BYD has really eaten into its future prospects. And I think even if you look at in terms of Europe, you're not seeing the massive growth which is expected for Tesla as an electric vehicle in that market. And you're just left with the US, where there's consumer confidence is going to be seen to it going down. And apart from that, on top of that, which is a cherry on top, is the marketing of the brand itself being so tied down to the president, who's quite erratic in the US right now, is not really boding well for that valuation on the share price. And I think the market ran ahead of itself here, and right now it's just more cool heads coming in and essentially just going to look at valuing the share price at where its true value should be.
Yeah, I'll start off with you. The question reads, should I buy Sasol at 65 Rand? I believe when Lake Charles lists separately, the metrics to value a chemical business will push the value up of Lake Charles. Should I buy now and play this strategy? I don't even think they've confirmed those plans to list Lake Charles.
No, it's in the pipeline. I excuse the pun, but I think it's one of those things. I think it's one of those things where now you start looking at the operating leverage that essentially Sasol has to the Brent crude price, and essentially it's much more of a chemical business, but it's still very geared towards the Brent crude price. And looking at where Brent crude has been hovering around, it really has been a litmus test on where global growth is going to be. So at the moment, looking at the fact that it's really been beaten down, it does look attractive, but not for me. I'm taking a wait and see approach. I do not really like putting money into companies which have negative free cash flows. And to be perfectly honest, they still have a lot of operational and governance issues which need to be focused on in order to see the value unlock in Sasol. So right now, it's looking attractive, but I'm not touching it with a 10-foot pole.
Rowan, I see you nodding there. Are you also, hitting the brakes when it comes to buying some Sasol shares? We spoke about that oil price and its connection to global growth. And, we are in these uncertain times. And I think you think of the IMF, who's also downgraded global growth as well.
Yeah, I mean, it's certainly been a challenging situation and environment for them for some time. I think what you've got is a business with quite significant operational headwinds, and now this lowering oil price just compounds that. And so, it just creates more challenging environment in the boardroom, having to look at sort of breakup, potentially sort of selling the crown jewels or unbundling the crown jewels, those businesses that are still operating well at good capacity and will, maybe benefit from cheaper feedstock. But overall, the investment case remains very cloudy. I think you are reliant on a higher oil price in order to sort of solidify your investment case, and I agree with the current environment and sort of the trade outlook as it is. That is quite negative, the impact on global growth. Having said that, if there is a détente and improvement between trade relations, particularly the US and China, and that improves sort of the outlook for global growth, Brent crude and oil will firm from here, and Sasol will go up from here. So that's kind of, I think, what you're speculating on the short term. So if you feel positive about that, it's an interesting way, a geared way to play it. But that's more of a sort of a trading view than an investment view.
I don't know. If it was me, I would hit pause, because that share price has been beaten for quite some years now, and we've had a number of our viewers also send emails around that as well. Let's move over to the education sector, really defensive space. The email here reads, to my analysis, Stadio is a great great business with a consistent, sustainable growth, strong balance sheet, and basically debt-free and strong cash generation. With a PE of 25, I'm worried that it might be overvalued. Is Stadio a great investment case, and is this a good entry point? Let's start off with you, Rowan.
No, so I think the viewers express sort of the potential for their investment. I think the tertiary education space is growing very fast. There is a lot of demand. The numbers are being publicized, how many applications there are for public universities versus how many spaces there are. So clearly demand exceeding supply, and then private players like Stadio and Advotech are filling that gap with their private universities, and hopefully they will soon be regulated and considered as university degrees. So it does look very exciting. I think the valuation, you've got to say, versus the potential growth, is it fair? If Stadio can continue to grow as they have, and I think it is a big market and they are a small player, so they can grow very fast, it actually does still look interesting and a good way to play, a pure play on the tertiary education growth. If you're sort of looking for more reasonable valuation but still exposure to tertiary as well as secondary education, then Advotech also remains interesting. It's not nearly as highly rated. So for us, actually, we prefer Advotech to Stadio on valuation grounds while still playing the theme.
And where are you seeing more value, Gia, in that sector? Would you play on a Stadio or an Advotech?
I totally agree with Rowan. I think Advotech is a more palatable valuation if you want to enter the sector. As Rowan has said, there's quite a deficit that the state has not really catered to in the public education system, especially at tertiary level, that I think Stadio and Advotech take advantage of. And I think both of them are really good defensive stocks and are in really good growth sectors. But I think right now Advotech's play on secondary education as well as tertiary is more of a play that I'd be taking right now if I wanted to enter the sector, and that's also purely on a valuation basis and not necessarily on the fact that I prefer Advotech over Stadio. But I just think right now, as we sit, Advotech is a better choice.
And what are your views, Gia, around Kearabilwe, which is just a purely a school, secondary and a primary school kind of play? Yes, we have seen those student numbers quite muted, and this, of course, on the back of the current economic environment where households are under pressure.
And the truth is, you can't outperform an ailing economy. And essentially, that's where I think parents start looking at discretionary spending. As much as parents really do love their children, and I do love mine too, but I think when it's really a tough time, you really start looking at where cost cutting can come in, and that you see that in those muted numbers. And also, what is really concerning is the write down of some of those assets within Kearabilwe, and purely because of the fact that future expected cash flows are not going to flow in, and the accounting standard requires that write down, and it speaks more to the economy than anything else. I think going into tertiary education is a far better play, because that is where people might not be cutting down on for future prospects.
All right, let's move over to Barloworld. Rowan, this week, the group announced that its biggest shareholder, the PIC, made a U-turn and is now backing the management-led takeover bid. Following that, the viewer is asking for the panel's view on this buyout bid.
Yes, so that is fairly significant development, because if you recall, the bid now that it's the standby offer is subject to, as it stands, 90% acceptances from those minorities in terms of accepting the offer so that they can effectively delist the company. Having said that, the BidCo have said that they may accept a lower threshold, but that remains subject to them deciding that. So I think they potentially are looking for greater than 50%. This gives them, I think, 44% of the company. So I think the probability of the standby offer moving ahead has certainly increased, but it's still not a certainty. So there's, it's sort of in Bidco's hands. And it was interesting to see that the PRC did use sort of the process to extract quite a few concessions from the Bidco in terms of a black empowerment transaction in the event that the company is delisted. So it's it's positive, but it's still uncertain. We think sort of it's unclear whether the deal will go ahead. It's really sort of you've got to sort of read Bidco's intentions, which we're not entirely privy to. So uncertain still at this point.
And your views around that takeover bid and its prospects of it actually going through, Gia?
Yeah, as Rowan said, it's quite uncertain. I mean, at the initial onset, I thought this was going to be quite an easy one for the shareholders, just purely because truly this business has been going nowhere for a very long time. And if you look at the price chart, it's really just held between two price points and just traded between those two since 2020. And I think for me, when the bid was announced for Barloworld, for me, what was quite concerning was the conflict of interest that the current CEO that they still keep really is. And there's been quite a vote of no confidence from the shareholders to the current board and the governance structure. And for me, I think, truly speaking, it has been one of those that I've held for trading, in the sense of the fact that I was willing to take out that offer at 120, and from where it was trading below 100 at that time was a premium of quite a good premium, and I was just going to hold it for that premium. But as an investment case, it's not one that I'd really be punting for the long term, as truly speaking, there's a lot of uncertainty in terms of this takeover bid, and as well as the governance structures are really in tatters.
Let's move over to Capitec before I get your stock picks. They're also out with results earlier this week, bumper numbers. Headline earnings were up 30%, and the viewer here is asking if the growth in Capitec is sustainable. Yeah, I'll give that one to you.
I don't think it's sustainable. I think it's been quite a good stock over time, and I think they've gotten to a point of economics of scale, which, I mean, essentially 1/3 of consumers in the space really have a Capitec account. And I think what was more impressive in that result is the number of people who are currently earning above 50,000 Rand a month who bank with Capitec. And I think for them, it's the growth story in farming out more earnings from those people, from getting their children to bank, selling other products to them. So I genuinely think it's a great story of the JSE, but I don't think it can really continue on such a high annual compounded annual growth rate.
All right, before I let you go, gents, let's get into your stock picks. Rowan, where are you seeing opportunity at the moment?
Yeah, so we like Bidvest here. The share has underperformed quite significantly. It is considered to be a play on the South African economy, but they do have a reasonable amount of business service operations in other jurisdictions in the UK. They are not significantly impacted by the trade war. I think there was maybe concern around their freight business, but most of the products that they'll be exporting are exempt from tariffs. The maize crop looks like it's going to be good, so there could be further exports there. And we're still reasonably bullish on the medium-term prospects for the South African economy, which they have a strong exposure to. They've said sort of if there's goods inflation, it is broadly positive for their business in terms of underpinning sort of sales growth. So, and the valuation looks reasonable. So it's sort of a play on SA Inc. with a little bit of offshore exposure and at a reasonable valuation here.
And Gia, what are you hanging your hat on today?
Yeah, the Chinese economies, the X-Tracker CSI 300 swap, the London line, and that's particularly because of the fact that since the recent sell-off, there's been quite a lot of value that I've seen on the Chinese market. And I think taking the top 300 in Shenzhen and Shanghai Stock Exchange, if you don't know exactly what's happening in the economy and you're just genuinely taking a play on the fact that there's been a recent sell-off in that market, this is a good entry, and I think right now it's where the next pockets of growth will be coming from.
All right, gents, thanks so much for your time this afternoon. That was Kearabilwe Nonyana from Scope Prime Africa and Rowan Williams from Nitrogen Fund Managers. Do remember that Stockwatch pre-records on a Monday and Wednesday at 1 p.m. and is live at 6:30 p.m. on Tuesday and Thursday, while Stockwatch this week is live at 12:30 p.m. on Fridays. Keep that in mind and keep your questions coming. For now, that's all from Stockwatch this week, but do stay tuned for lots more coming up right on Business Day TV.